So you're about to buy a home, but your credit, it's not the greatest. That's okay. There are some ways around that, and you can still go out and purchase a home even if your credit isn't so great. Now, you can save a lot of money by having good credit, so this video is going to talk a lot about how you can clean up your credit before you go to buy a house. So hope you stay with us, and let's get started. Hi, and thank you for watching. My name is Matt Moore. I'm a real estate agent in Lancaster, Pennsylvania, serving the surrounding area of South Central Pennsylvania to go along with that. And I am talking today about credit. But before I do, I just want to mention a couple of things. I've got a lot of great resources for home buyers, home sellers on my website. That's mattmoorehomes.com. You can look for some of those resources there, especially in my blog. I've got a ton of content. Plus on this YouTube channel and everywhere else, if you're watching this on Facebook or Instagram or YouTube, I've got a lot of resources for home buyers and sellers. I hope you follow at the addresses below. And of course, if you're on YouTube, subscribe as well. Would love to see you subscribe with me. Now, I'm going to be talking right now about credit. And that is really, really important thing to have. And in fact, the stronger credit you have when you go to buy a house, the better off you are going to be. Now, you don't have to have the best credit in the world to buy a house. In fact, there are different options and different things that you can do to not only boost your credit before you go to buy a house, but even if you've exhausted all of those methods, you can still have options to buy a home. And that's what we're going to be talking about today. So for many of us, one of the big goals in life is to eventually own a home and be able to just be your own landlord, right? If you're renting right now, you got to listen to the landlord, you got to talk to the landlord if there's anything you want to do, or the property manager, if there's anything you want to do to that property. And even if it's just putting a hole in the wall, nobody wants to do that. So home ownership's super, super desirable. I get it. I was a renter and now I'm a homeowner, and definitely really feeling the benefits of that and loving every minute of it. But life happens. Some things happen in life that may lower your credit, and that's fine. Now, there's also some times where you may just not have a lot of credit, and maybe you're younger and you just haven't built up a lot of credit over time. You're still doing a great job paying all of your bills on time, but maybe your credit history just isn't really extended, isn't really long. So because of that, your credit score is not super high. So again, the better credit score you have when you go to buy a house, the better off you're going to be, and you're going to save yourself a bunch of money. So one common question I get a lot is credit everything when it goes to purchasing a home? Well, the short answer is no. There's more than just credit that lenders are going to be looking at. But there are definitely some variables that are really important, and right up there at the top is credit and how good your credit is. Credit determines how worthy you are of giving you money from a lender's perspective and then having your ability to pay that back to them. So it's almost like a risk assessment for you to that lender. And of course, the lower your credit score, the less likely you are in the eyes of the lender to pay that loan back, or the more likely you are to be a liability. So it's really important that your credit score is higher. That's going to give you the best rates and save you a bunch of money. So I want you to take a step back and I want you to look at your current situation. Are you working a job that's steady? If you are working a job that's steady, is there steady growth in that job? What does your credit score even look like? Do you even know what your credit score is? All of those questions are questions that you need to evaluate yourself on, and then that's where you're going to launch from. So if your credit, or you don't know what your credit score is, or it's bad, then there are some action steps you can go in order to figure that out. Now, you don't have to necessarily have the greatest credit in the world, like I've been saying, but if you do have a steady job with steady growth and steady income, sometimes lenders can kind of give you a little bit of some breathing room when it comes to your credit score and allow you to take a mortgage out and maybe even give you some slightly better rates too, even if your credit score isn't quite the greatest. So again, a lot of variables all going around, and it's up to the lender to decide how credit worthy you are overall. And speaking of credit score, the credit score is basically like your financial fingerprint, and you need to take care of it like it is your identity. You wouldn't want any thief to steal your identity and cause you a whole lot of headaches, right? So why don't you protect your credit just like you're protecting your identity? And you're doing that by following best practices and doing things like that. And credit scores range from 300 to 850, 850 being considered perfect, and anything above 700 being considered very good. If you go lower than that, then you start talking about okay credit or not so great credit or even just flat bad credit. Now, let's say your credit score is below 650 or maybe quite a bit below that. There are some programs that certain lenders do have in order to provide you that mortgage. There's some things you're going to have to do in return, but it does give you that ability to not only improve your credit, but also improve your credit worthiness in the eyes of a lender. So if your credit score is low and you've exhausted all of the next options we're going to be talking about, there are still some options for you, so don't completely get disappointed with the situation that you might be in. All right, one question that I get a lot is, what credit score do you need to buy a house? And really, the answer just kind of depends. The answer is based on the lender, the type of situation that you're in. Can you put 10 to 20% down? All of those things, plus what's your savings situation look like in the background? Do you have a lot of money built up that you can kind of protect yourself and the lender can see as, hey, this person has a little bit of a nest egg in case things might go wrong. But in general, lenders are going to look for a score of about 660 and above. So if you're above that number, you're already kind of off to a good start, and there's some things you can do to improve. If you're below that number, well, we're going to talk about those things that you can do to improve your credit score overall. When I talk about a credit score and those lower rates, that should equal dollar signs in your head and in your mind. So again, the better rate you get on a mortgage, the more money you're going to save in the long term. Here's an example. LendingTree came out with a study that said $250,000 house, 30-year mortgage, all else being equal, but two different credit scores. So we have a very good credit score over 700 and an okay credit score that's below 700 but above the acceptable level for a lender. Over the life of that 30-year loan, $30,000 you can save just by having a better credit score than, say, only if you had an okay credit score. $30,000 over the span of 30 years. Then you take that average, that's $1,000 per year on average. You stretch it out, and that's money savings right into your pocket. All right, so now that you understand how credit works within buying a home, let's talk about some tips that you can do to improve your credit score in a pretty short period of time. Of course, that's what we all want to know, right? Well, the very first thing you need to do is figure out what your credit score actually is. And believe it or not, the federal government has mandated that every person in the United States gets a free credit report every year. So once a year, you can get your credit report from all three agencies directly to you in order to be able to figure out if there's any errors. And I'm going to put some links down here in the description of the video here, and you can take a look yourself at what your credit report might be. And I really encourage you to sit down and really look at that credit report. There's a lot of times where there are errors, and if there are ever errors, that can save you a ton of money, because just like that, you can fix those errors and your credit score can jump. So maybe once upon a time, there was a credit card that was taken out, but if you officially closed it, but the credit reporting agency never got the word that it was closed, it's still showing a balance and it's lowering your credit score. Or maybe there are some missed payments on your credit report that weren't actually missed payments. Maybe it was an error, a clerical error that potentially can lower your score in a big way. So find those errors and dispute them with the agencies that you find those errors on. And just like that, once the investigation is opened up and then completed, you can boost your score, sometimes even a couple of 100 points in some cases, depending on the situation. And that can immediately take you out of bad credit into good credit. So that's one very important step. And the very first step is to look at your free credit report and check for any errors. All right, the second tip on the list is to pay down the amount of credit that you have. So let's say you have a lot of credit debt right now in credit cards or many other options that there could be, loans or outstanding balances, even utilities and things like that, where you just have gotten a little bit behind. That's okay. Life happens again. Maybe you had a major car repair and you had to put your money into getting your car so that you can get to your job. That's understandable. But here's the deal, is that if all that other stuff starts getting backed up, well, it's going to start bringing your credit score down. So do the best that you can to try and put more money back into paying down those credit debts. So what's going to happen is you're going to raise your credit card utilization percentage, meaning that the amount of credit that you're using based on the amount of maximum credit you have gets a little bit spaced farther apart. So your utilization goes down, your credit score goes up. And the third point, which kind of goes along with the previous point, is to make sure your credit bills are current. For example, utility bills. Maybe you're a couple of months behind. Maybe your cell phone bill is a little bit behind as well, or maybe you're a little bit behind on those credit card payments. Bring them up to current, bring them up to date, and don't allow a bad remark on your credit score of a non-payment to even be a factor, because those kinds of things will bring down your credit score. Another quick thing you can do, which you may not have even thought about, is you can ask for a credit limit increase. What I mean is, how many credit cards do you have in your wallet right now? Do you have a couple? Do you have just one? Do you have more than 10? Well, all of those credit cards have a limit on them, right? So maybe it's $3,000 on one credit card, $2,000 on another one. Well, each one of those cards and amounts of credit all kind of goes into a pile. Well, each one of those credit cards also has the ability to ask for a limit increase. So if your limit's $3,000 and you've been doing a great job making on-time payments and you haven't gotten behind on that, and there's no reason why that credit card company wouldn't deny you, well, maybe you can go into their portal online. You can give them a call and ask for a credit limit increase. When you do that, you will expand the limit, which will expand the amount of maximum credit that you have to your name. And again, that's going to lower that credit card utilization and bring your credit score right back up. All right, the very last point, and this one's kind of a stretch for some people, but it does work for a lot of people, and it can work in a huge way. It's called piggybacking, and it's really going off of somebody else's credit. So let's say, for example, you have a grandparent or a parent or maybe even a sibling, somebody you know who trusts you, who likes you, and is willing to do this. Next time they open up a line of credit, or even if they have open lines of credit, maybe they can add you as authorized users on that, and that will allow you to tap into that good line of credit on that particular credit line. So again, for example, let's say grandma wants to open a credit card. She adds you onto that account, so you guys are both sharing that debt, and you guys are both sharing that responsibility. Let's say grandma's really good at paying down those debts, always on time. You're going to start to feel the good vibes coming from that, and it will overall improve your credit score. Now, that's not to say you go and take grandma's credit card and go max it out at the mall. That is a surefire way to not only ruin your credit score, your grandma's credit score, but also your relationship too, and that's something you don't want to do. So again, if you're going to be doing this, you have to take ultimate responsibility on this and just try to avoid even doing anything at all with that line of credit. Let them, with the great credit score and the means to do it, pay off that credit. As they utilize it, they can pay it down, and you are going to benefit from that as well. And in some cases, this has been known to raise people's credit score by a couple hundred points over the span of a few months or even the span of a couple of years. So all of those things that I've listed are, of course, really good ways to raise your credit. Some of them take a little longer than others. It could be a couple of weeks, it could be a couple of months. It actually, depending on what you're doing, could be a long-term credit repairing process. But overall, the end goal is to own some real estate. So if you're not quite there yet, you can take these tips and you can really start to ramp those up. Now, here's one little caveat is as you're going to purchase the home, you get pre-approved by a mortgage lender. Let's say you get an offer down and everything is about to roll through the whole escrow process. That's when you want to stop completely using any credit whatsoever. So you don't want to go open a new credit card. You don't want to go buy a new car unless you absolutely have to. This is not one of those, I'm going to open up more lines of credit during the time that escrow is taking place. And the reason why is because your lender is going to be looking at your credit periodically throughout that entire process. And if there's anything along that entire line that basically sets your credit score down or makes a big change in what your credit is, well, that's going to be brought up by the lender, and it can make deals fall through. I've definitely seen that happen. You just want to be really careful once you're in the escrow process. As soon as closing happens, doesn't matter anymore. After that, you can go about your business and do what you were doing before. So again, I hope those tips helped you. If you're in a situation where you're looking to build your credit before you buy a house, those are all really good things you can do. If you're in a situation where you really don't have that much credit at all, well, spend a little bit more time building up that credit, open some credit cards or maybe just one or two credit cards and pay those things off immediately. It's going to look really good for your credit. It's going to build your credit score over time and eventually get you in a place where you can purchase a home just for you. And if that's you and you live in the Lancaster, Pennsylvania area or South Central Pennsylvania and you're looking to buy a home in the shorter or even medium term, I'd love to talk to you. Send me a comment below. You can reach me in a number of different locations. I'm going to put my contact information here. Would love to talk to you about your real estate goals. So until then, guys, thank you so much for watching. Again, my name is Matt Moore. I'm a Keller Williams agent in Lancaster, Pennsylvania. There's all my social platforms below. If you're watching me on YouTube here, would love to have you hit that subscribe button, and I've got a lot more video content to come that I think you guys are really going to enjoy. So until then, have a great day and really work on building that credit. Thanks for watching.